Great, thank you very much. So today I'm introducing you, and some of you have met us before, Landsowne Oil and Gas. We are listed on AIM here in London. We've been on AIM for quite a while, and our assets are offshore Ireland. So we're off the south coast of Ireland in the Celtic Sea Basin in shallow water. So we're in 100 meters of water, so 350 feet. And our portfolio now consists really of appraisal. Primarily. There is exploration upside, which I'll talk about later, but our major project is Barry Row, where we have 20% equity interest, and our operator is Providence Resources with the remaining 80%. Now, Barry Row has two CPRs done on it, one at the Middle Wealden level, one at the Basal Wealden level, a combined 2C resources of 346 million barrels, 69 million net to Landsowne. Obviously, we've suffered in the last 2 or 3 years, along with everybody else in the oil sector, and our current market cap then is about £5 million. We have a number of large, and they've been very supportive shareholders. Our key shareholder, Lampy Conway, is a New York-based fund, and Brandon Hill Capital, who are here today, also a significant shareholder, just below 11.5%. So over the last while, we did have a more extensive exploration portfolio that has been partly drilled out. We farmed out a well that was drilled by Kinsale Energy, a subsidiary of Petronas, who own and operate the infrastructure in the basin. So the Kinsale Head field has been on stream since 1978, exporting gas into the Irish grid, and we have that export pipeline is directly above us, so we have a gas export route to the beach. But really, our focus is on the oil in Barry Row. And this was the first oil test was drilled in the 1970s, in the first phase of drilling in the basin by Esso. But those early wells testing oil from Wealden, Lower Cretaceous Wealden sands, didn't flow at better rates than about 1,000, 1,200 barrels a day. So it sat there for a long time. And then it really got going again in 2011. We shot a 3D seismic survey over the structure, which was obviously tremendously helpful in producing a much better map. And we went back and drilled an appraisal well in 2012, the 482410Z well. Now this well, it tested the Basal Wealden sand package. There's two sands there. The lower sand, the A sand as they call it, right at the base, was oil bearing, and tested 43 API oil at a rate of 3,500 barrels a day. So that was more than double the previous best test on the field. So that was very positive. There was also a gas sand just above that. It's labeled as the C sand here. And that was added on. That flowed at a high rate too, and the post-well analysis suggests that on its own could do 30 million cubic feet a day. The reservoir, it's high quality. We had a lot of rotary sidewall core samples, porosities up to 18% and up to 3 darcies permeability. The well test permeability for the oil zone was around 550 millidarcies. So, everything was looking really very good then. By the time the CPR was completed in 2013, we were looking in very good shape, and the project had a lot of energy. But the decision was made to really go down a farm-out route rather than to drill more appraisal wells. And really that process kind of fell foul of the fall in the oil price, and the project has got stalled effectively. Then our operator, Providence, I don't know if you've been following them, but this summer they drilled a very big exploration well in the Porcupine Basin. So that has been taking their firepower for the last couple of years, really. That well, very, very gutsy well, but unfortunately they didn't find any hydrocarbons there. So Barry Row is now back to being their prime project, and they're back focused on this. A number of important things have happened this year. We got an extension to the license. So the first phase of the license has been extended by another 2 years to the middle of 2019, and the full term of the license for 2 years beyond that to 2021. The other thing we did this year, we've had another go at reprocessing the 3D seismic using some more advanced seismic techniques. And this has actually greatly improved the imaging of the actual reservoir package at the Basal Wealden level. So that's been very important. And with Providence returning focus to Barry Row, they've come out and they're committed now to drilling a further appraisal well. Timing is the second half of next year into maybe the first half of 2019. The uncertainty on the timing is really around the well permitting process, which takes longer now than it used to. They checked the market in August. They went out to the rig market for expressions of interest for drilling rigs, for drilling in that time window. And perhaps not surprisingly, there is plenty of rig availability and the costs are very reasonable. So they're looking now at a appraisal well up dip of 10Z to firm up the volumes in that fault block, and then sidetracking into a higher fault block to again firm up volumes in that to move it towards a phase 1 development. So the vertical well has been costed at $20 million, which would be $4 million net for us, and the sidetrack at $5 million, which would be another $1 million net for Landsowne. And the purpose of these two wells is to basically assess not all of the field. I think over the last while the realization has come that it's much better to start with a phase 1 development and then basically appraise and develop the rest of the area later on. So it's focused on the eastern part of the field, but looking at accessing 463 million barrels STOIP and 160 odd recoverable based on a 35% recovery factor, which is the sort of recovery factor that's come out of the work that we had done for the CPR. So I guess that's the real news over the last couple of months, is that it's a return to Barry Row for Providence. It's a return to focus on this asset and plans for drilling next year. I said we don't really have much left in exploration in our portfolio, but that's because we've had to relinquish a lot of the wider exploration acreage. But there still is a lot of upside on the Barry Row license, because there's a number of sands in the lower Wealden and below that in the Jurassic, in the Purbeck source rock, which have been logged as oil bearing in previous wells, but which have not flowed on test. Some of them have not actually been tested before. So there's substantial volumes in those, but none of those are included in our CPR numbers, and they may come into play through the appraisal wells. I think perhaps more excitingly, even on the exploration front, is that deeper down, there's a very thick Jurassic section under the Cretaceous reservoirs here. And our new 3D seismic, and particularly the new reprocessed version of it, is imaging those deeper structures much better. And we can see large fault blocks underneath, and also sort of wedges within the upper Jurassic sequence. Now, you know, our basal Wealden sand is at 7,000 feet, so, you know, in North Sea terms, really quite shallow. These Jurassic reservoirs would be deeper than that. You're talking about 10,000 foot and deeper, way down to probably 15,000 feet. So there is an exploration upside to the asset. So in summary, it's a very simple story. We're focused now on appraisal, shallow water. It's a substantial resource, and that's why we think with our 20% interest it's worth just focusing on this asset. The farm-out process has not finished. We are, in fact, still talking to a number of parties about farming in. But I think Providence's view was that what we need to do is to move forward with our drilling plans. We can't wait for the farm-out. We're just going to move ahead, start planning the drilling and permitting the drilling. Providence, because they farmed out their Porcupine well, basically have got enough money to cover their costs for the drilling next year. Now, Landsowne, we're basically waiting for the well to firm up. We also waiting to see what offers we get through the farm-out process. So we're not committing one way or the other. We want to keep our options open into next year. But in the first quarter of next year, we'll then make a decision on whether there's a farm-out that we want to take or whether we seek to raise money to stay at 20%. I think it's a low-risk opportunity, it's appraisal, and it's in shallow water. Costs, as everybody's been saying, the last few days have come down. Even when costs were high, we were carrying a break-even of around $40 a barrel. With current costs, we think that's gone down to around about the $25 a barrel mark. So we think it's a robust project, and basically we've been stalled in this low oil price environment, and we're ready now, poised to move forward again. Thank you.
Thank you very much.